I'm here with Cody Willard, hedge fund manager, TV news anchor, investor and author. To get Cody's book, Everything You Need to Know About Investing, please visit tradingwithcody.com. The following dialogue is a free sample straight from the book. Let's get started. Cody, what's your overall strategy and approach to investing and trading in the stock market?
In a general sense, my mission is always to find the best companies in the fastest growing sectors and invest in their stocks when they are cheap, and to find the worst companies in declining sectors and short them when they are way overvalued.
How do you get started with your first trade? How much of each stock do I buy when I start building my portfolio?
You want to try to have your cake and eat it too? Start off by putting 1/3 as much money as you want to eventually invest into the top 5 or 6 stocks that you have done your homework on, want to invest in, and then put some more in a few weeks in whatever stocks are rated highest at that point, and so on. Use scales and don't rush in. Always have plenty of cash and door income to be able to sleep at night no matter what happens to the markets.
What is your reason behind investing in only 12 to 15 stocks instead of many more, say up to 20 or 30 different stocks? It would de-risk the portfolio a little.
2 primary reasons. If you over-diversify, you will limit your gains over time, so I want to be at least somewhat concentrated in my names and have some cash on hand to buy more. And secondly, it's hard enough to stay up with 12 to 15 stocks. Doing our homework, analyzing the companies and keeping an edge on any more than 15 can mean distraction, and distraction usually means mistakes, and mistakes mean losses.
To order Cody Willard's latest book, Everything You Need to Know About Investing, full of straightforward, irreverent and easy to understand strategies, please visit tradingwithcody.com. Okay, next question, Cody. If you anticipate the market to topple, would you go heavily short?
I've seen a lot of brilliant traders and analysts lose their careers over trying to short a crash. Easy does it. I think most investors should be looking to survive a crash, more than profit from it.
Do you have a % profit number in mind where you would sell half of your position and hold the rest?
No, there's no set rule for taking profits. If I'd sold even half of my Apple when I made my first 100% on it, I would have missed out on the 1600% on it. But other times, like with our having caught a huge one-day pop in many other shorter-term trades, when I have then turned around and sold those calls the next day for a big profit, yes. It just depends on the analysis, the situation, the timing, etc.
Do you use technical or fundamental indicators or talk to your contacts in finding tops and bottoms?
For my long-term investment theses, I rely on bottom-up fundamental and top-down marketplace analysis. For short-term navigation, I mostly rely on sentiment, psychology and news analysis. I've never drawn a line on a stock chart in my life.
To what extent does valuation play into your stock buying equation?
Valuation usually plays a huge part in my investments, but I'll often use different metrics to determine a valuation. For a big cap stock like Apple, I focus on its enterprise value, total market cap, net cash balance, to earnings multiple, or EV/E. In FIO's case, it's a small cap / venture capitalist style investment that will either pay off tenfold or will be a 50 loss.
What's the best way to get started trading options?
You should not trade options at all until you've been reading me and other sources on how to trade options. I'd suggest creating a fake brokerage account where you can trade options on paper so that you can learn more.
What do you think of doing more sophisticated options trading, such as unwinds, spreads, straddles, etc.?
I don't typically use unwinds and spreads, etc. with my options trades. I do a lot of homework and expect that my directional bets will work out okay over time.
What do you think of just shorting market puts as an overall strategy, which can be a killer in a crash, but the time premium works for you in a flat or rising market?
From Victor Niederhofer to James L. Tucker, I've learned from many great traders the ups and downs of shorting puts. It works great when it works, but I've seen Victor wipe out years' worth of gains by shorting puts when a bull market turned bear.
Do you recommend leaps on some of your favorites, or do you prefer common?
Leaps are options that expire, say, 12 months out or more. And yes, I use calls. Call leaps are common, but using any calls will be wildly volatile and risky along the way. Leaps on this high of a beta stock are expensive, which adds to their risk, but options give you a way of capturing leverage with a little amount of capital as the stock moves. You have to decide on your own what's reasonable for you.
How do you feel about trading and investing in penny stocks?
In general, the rule to investing and trading penny stocks, any stock trading at less than $5 is typical. I consider a penny stock is, don't invest or trade penny stocks. A couple years ago, I'd been invited by a friend to a ZZ Top concert at Beacon Theater in New York City. We eventually ended up on ZZ Top's tour bus because my friend was also friends with ZZ Top's Billy Gibbons, and in between me getting to pick a little bit on Billy's Les Paul guitar, his wife and I were talking stocks. And then the conversation turned to a penny stock that she owned, and I set the guitar down because I was pretty sure where this talk was about to go. The stock she wanted to know about was, well, please go visit tradingwithcody.com and order my book to read the rest of this story.
To order Cody Willard's Everything You Need to Know About Investing book, or to find out how to see all the trades he's making for his personal portfolio in real time, please visit tradingwithcody.com.